Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 Index. We'll start with the daily Ichimoku cloud. In the last update, we were looking at the resistance zone at the front end of the cloud here at 4518, and we needed to see that the market needs to break past that resistance zone, and that would activate the 4600 upside resistance target. We then did get that breakout, and then it did touch that 4600 resistance zone, but then consolidated and digested this move, started to sell off, only to retest the front end of the cloud here, this level there. Let me just put a line in there, that front end cloud chart support level, this low there, as well as the June pullback. So much needed pullback in August to digest this tremendous rally we've had since crossing the cloud back here in March. Very strong rally in the market, then consolidated and then rebounded from this 4356 front end cloud chart support level, and only to run into trouble at 4518, and now currently pulling back and testing the standard line and the turning line of the cloud for support. Now there's downside risk, as we can see from the front end of the cloud, indicating we might see a bit more consolidation coming through as the market is going into a difficult September and October period, seasonal weak periods in September generally. So if this resistance zone holds here at 4518, then we could see this 4356 being retested over the next couple of weeks to make an October low, to retest this low here of June, and then set it oneself up for another year and rally back up to 4518 and 4600. So we need to get through this period of consolidation, seasonal weakness in the market, and then we could see another rally up to the old resistance zones here, 4518 and 4600. Now that 4600 zone comes from old resistance levels here. You can see that 4518 comes from this zone here, very big resistance zone, and 4600 comes from the old highs here. We had a multitude of old highs there on the S&P. Turning to the weekly, the picture is a bit clearer there. You can see where the other old high, that resistance zone 4600, we've had really 3 points there to look at. Significant resistance zone. The market then consolidated, pulled back, and then rebounded from this 4356 zone, as well as the front end of the cloud. Yeah, that's a major support zone there. You can see 4340. So the market rebounded from those two support levels, one support level on the daily and one support level, major support zone on the weekly, which comes from that zone there, as well as that old cloud chart level there. So that's the support zone for the rest of the year, actually, to see if we're going to get September, October low maybe down here, and then another year-end rally to retest that 4600 resistance zone. After running into trouble here on the 4-hour Ichimoku 4600 zone, you can see the consolidation then started for August, generated a cloud chart sell signal on the 4-hour there, sliced through the top end of the cloud, lost support there, then managed to find support at the bottom end of the cloud, only to run into trouble there at the turning line of the cloud, and then lost support once again at that 4467 support zone, which was quite a significant support zone. You can see as another one to keep an eye on. Then sold off to then rebound from those daily and weekly cloud chart support levels of 4356. Back up, now broke through the bottom in the resistance zone, now back up in bullish territory. Price action above the cloud is bullish, so it's now testing for support at this bottom end cloud chart level. So we could see a low up to about 4410, 410 and 420, 4430 for support, and then a continuation of the move from there. But keep in mind that we are testing critical support zones, so we're dangerously close to changing to bearish outlook on the 4-hour Ichimoku cloud. But keep an eye on these bottom end support levels here, and that cloud chart level there. Will it remain resistance, or will it become a new support zone for the month? Turning to the hourly chart, You can see they're fighting for support at this front end cloud chart support level on the hourly. Critical for support to hold here. If we dip below this level, the next downside support target would be this zone here at 4,411. So keep an eye on that one. We could see that level being tested if support fails to hold at this front end cloud chart support level. Now, interesting point to note, not all rallies are equal. If we just look at the difference between the performance of the S&P 500 and the S&P 500 equal weighted index, you can see that the large cap, a few large cap players in the S&Ps have really been driving the rally, because for the year so far, year to date, the S&P equal weighted is only up 4.6%, while the S&P 500 is up 17.6%. So you can see a lot of the performance sits in the very large players like Apple, Amazon, Tesla, and Nvidia, and all those in the S&P 500 that's been driving this rally since the March low. Yeah, so you can see the market did trade very much in tandem, and then in end of March, beginning April, May, June, and July, by June the whole AI theme started to really drive a lot more of the large cap tech players into performance versus the equal weighted index. So you can see there the performance of the index is slightly skewed in terms of the large market capitalization stocks. So keep an eye on that, because there's a very narrow participation in the market right now. Until next time, happy cloud chart trading. Bye for now.